Hi guys, and welcome to our special series Save Karo with Dinero. I am Anchal Pathak, and with me I have the management team of Dinero. This is a special 3-episode video series where we are going to spill some investment secrets. By the end of it, you will understand investment much better and also learn about some funds. So, give a warm welcome to my guest today, Kashyap. Thank you so much for joining us. How are you doing? Kashyap is the founder and CEO of Dinero.
Thanks for having us, Anchal. Really excited to be here, to be talking about Dinero and about the co-created product that we have with 5paisa. Along with that, happy to share some insights in the world of investing in funds in specific so that our young listeners can benefit from it. Before we move on, just a quick introduction to Dinero. Dinero is a neobank, and it started off with a premise to help young Indians build long-lasting and healthy financial habits that will benefit them in the long run, and also reward them along the way. That's essentially what we're trying to do in a nutshell. And one part of the product which we're building in partnership with 5paisa is an ETF-only platform that will help these young retail investors get started on their investment journey and make strong returns in the coming years at a cost which is fractional when compared to a typical mutual fund or any other fund that's out there. So that's essentially what we do in a nutshell, Anchal.
Right. Since you mentioned the mutual funds, let's talk about mutual funds. What exactly are they?
Sure. Basically, I think a lot has been already said about mutual funds, but let me just start with an analogy, right? Let me give an example. Think about going to a restaurant, right? We typically have two options. One is to order a la carte, where we choose what we want to have for that meal. Sometimes it's a hassle, like we all know. The other is to, of course, go for a buffet, right? The same is true for stocks versus mutual funds. Basically, mutual funds are a curated buffet of stocks, right? Basically, somebody else is taking the pain of putting together the menu for you. That's essentially what mutual funds are. And in an idealistic world, mutual funds serve a great purpose, right? Experts curate stocks into these baskets, and investors like you and I, who probably don't have the time or the expertise to pick the right stock, can invest into these baskets which are curated by experts. That's essentially what mutual funds are.
So how did they gain prominence? Can you tell us the history behind that, the story behind it?
Sure. I think all of us have been witness to Mutual Fund Sahi Hai as a campaign, where various celebrities have been there on primetime TV, right? That's exactly the kind of impact it has had. That's a clear indication of how mainstream mutual funds are in our day-to-day life. And also thanks to SEBI's efforts and the entire industry's efforts, especially over the last decade, mutual funds have not just been accessible to urban individuals, but they're also available to deeper parts of the country. So essentially, mutual funds have scaled tremendously over the past decade or so. Just to put some quick numbers into context, the overall size of the mutual fund industry has grown fivefold just in the past one decade, 2011 to 2021. I think the current size of the industry is about 3,73,000 crores, right? That just goes on to show how huge mutual funds are and how great a contributor they are to the Indian economy as a whole. So that's a little bit about how they've gained prominence.
Right. And what are the advantages of investing specifically in mutual funds?
Good question. I think straight up off the top of my mind, they're easy to start. They're easy to understand for a new investor who's just getting started on their investment journey. And typically the onboarding friction is also almost negligible, right? But now if we go a little deeper, the greater advantages of mutual fund come from diversification, right? If you keep all other factors constant, typically investing in multiple stocks is way better than investing in a single stock, right? Like we've all heard, not put all your eggs in one basket. That's what diversification is, right? Of course, there are other parameters to consider as well, but in general, diversification is the most significant advantage of mutual funds. Now, to add to that, these are not just any random stocks that are put together, right? But these are handpicked by expert analysts from reputed institutions after performing complex analyses. Now, investors like you and I, who do not have the time or expertise or even access to such kind of analyses, we cannot sort of pick stocks and curate portfolios to that level of accuracy and optimization, right? So essentially, mutual funds are doing all that, all the dirty job, and they're just giving you the end product. So that way, it's a great place to be starting off for young investors.
Right. You've spoken about the advantages. Now let's talk about the disadvantages. This is not something that everyone talks about. So let's clear that out over here.
Sure. I think, I mean, now this is the fun part, right? For us, this is absolutely the fun part. We've been, so far, everything seems hunky-dory for the mutual funds story. And it makes a brilliant case to pick some mutual funds right away. And here is where we at Dinero have also spent a lot of time and efforts in research to figure out how to solve this conundrum that mutual funds come with, right? Now, what is that? What is that conundrum that I'm talking about? So mutual funds typically take a small fee known as expense ratio, or sometimes called as management fee, sometimes in the form of exit load. Basically, all of this fee is something that investors pay to the fund. Essentially, this is to pay for their operational expenses, right? They're providing as a service and we're paying them a fee. That's typically how it works. Now, in India, typically these expense ratios for mutual funds are between 1.5 to 2% of the principal invested. Now, on the face of it, 2% might seem very low, right? It feels negligible for the kind of effort we have to otherwise put in to curate our own portfolios. But let us do a quick thought exercise. Essentially, let me just show you a quick thought exercise. We are now, let's say we start off with a corpus of 10 lakhs today, and we want to invest in mutual funds for the long term, right? For a period of 10 or 15 years. Now, if you start off with 10 lakhs today, let's make a quick couple of assumptions. One is that the expense ratio is 2%, the fee that we just spoke of. And the other is that the growth rate is 12% annualized, right? Now, of course, mutual funds are subject to market risk. This is something we've all heard of. So the growth can be more than 12% or less than 12%. But for the sake of this example, we're just sticking to 12% annualized. Now, what happens if we just keep on investing this 10 lakhs year on year is basically at the end of year 10, we see that we're spending about 35% of the principal invested just in the form of fee that we're paying. So essentially, of the 10 lakhs, 3.5 lakhs is the cost that we're paying to the fund just for managing your money and putting it in a portfolio, right? Now, that's huge. Now, if you look at it at a longer horizon, let's say you're looking at it from a 15-year perspective, you're paying 7.5 lakhs just in fee to the fund, irrespective of how much the fund has grown. The fund might grow, the fund may not even grow because we're all talking about risky assets, right? So this is a huge cost that retail investors have to bear. And that is essentially what the disadvantage of mutual funds are. Of course, as we go ahead and as we talk more, we'll talk about how to what are the other kinds of funds that we can look out for, which act as a smart alternative to mutual funds and have the advantages of mutual funds, as well as sort of take care of this disadvantage that we're talking about as well, right? So, but yeah, the cost is the biggest disadvantage that mutual funds come with.
Right. Well, thank you so much, Kashyap, for your interesting perspective on mutual funds. Can't wait for the next video where we talk about and explore other funds too. See you soon.
Sure. Thank you so much, Anchal. Really nice talking to you.